Hello, my name is Brandon Wendell, and I'd like to welcome you to the Wendell Effect. And this is for the week of the 23rd of April. We're going to take a look at the energy index, or sorry, energy futures markets. And just before we get started, just need to remind you we're not broker dealers or investment advisors. Going to look at this information from an educational standpoint only, not telling you to buy, sell, or hold any particular security, giving personalized recommendations, past performance, no indication of future results. There's always risk involved in the markets. No matter what we do, we can't eliminate it. We just try to minimize it. And we are not subject to trading restrictions. We can have position as security or initiate one at a time. Give me some feedback, please. Let me know what you like, don't like, what you like to see, what you want me to talk about. And you can hit me up at brandonwendell.cmt@gmail.com. Hit me up on Twitter. Follow me there, too. I'm pretty active at TraderBW. And you can also please hit like and subscribe. It helps us out quite a bit on YouTube for the Wendell Effect. So without further ado, we're going to jump in for the week of the 23rd. But first, I'm going to start off with a request, which is for the US dollar index. And it's pretty apropos to speak about it when we're taking a look at what's going on in the energies, because they do move typically in opposite directions. If the dollar is rising in value, the commodities are cheaper because it takes less dollars, the buying power goes up, and vice versa. So on the weekly index, we're still in a bearish trend, although we may be slowing down a little bit. We'll just have to wait and see what happens. But we do see almost a little bit higher lows while we're making the same lows on the price. So the momentum indicator, the RSI that I'm using here, is basically telling us we may be flattening out in our downward trajectory. We're getting a little bit slower in our downward decline in value in the dollar. On the daily chart, it doesn't look like it's slowing down as much. We're still seeing weakness in price, but again, not as deep as it was moving before. We're starting to flatten out. So while the dollar will still decline, and that'll cause commodities to go up and other currencies to go up, it looks like it's going to slow and not be as much of an influence. And on the 4-hour time frame, you see lower highs, lower lows. It's a very weak, sideways, but trying to break down. So if we do finally get below 40 on the RSI, I would expect us to shoot down towards that 100, or actually 101 on the index. If not, if we don't go below 40, if we happen to pop up and get new highs on momentum, breakthrough is possible, and there's really nothing to hold us down up until this 103.5. So keep an eye out for that. Moving on into crude oil weekly chart, you can see we did try to rally and break out of our sideways channel we were in on the weekly, but we never got the momentum needed, and we're correcting back down probably towards the bottom of the channel around 71. Looking at the daily chart, you see the correction that's going on right now. We did break into bullish territory, but we got this weakness. Watch to see if we pull back below 40 on the RSI, then we're likely to make another test of that bottom of the range, if not even the weekly demand. However, if we're going to bounce, it's probably going to be somewhere around a 50% retracement here, right around 72 or high 71s. And if that holds above 40 on the RSI when we get that bounce, then we should see prices shoot up towards 88. And on the 4-hour chart, just seeing a little bit more the kind of a microscopic view looking at this, you're seeing that bearish momentum picking up for now. Again, as we approach that 74 to 72 area, watch to see if we get any kind of divergence. That'll be your warning sign that prices are going to pop upwards. As of right now, crude is still looking bearish. And nat gas still looking overall bearish, but we had a positive divergence, and that led to the green candles over the past couple weeks. And you can see that we also had a positive divergence on the daily chart. Not enough to reverse and cause a big move up, but it was enough to correct a little bit and maybe cause us to move sideways for a little while in price. On the 4-hour time frame, we had our correction about 38%, as you can see, from the gap down and the beginning of that bearish move. We ended up stalling out a little bit with some positive divergences. Then, we couldn't hold that momentum. We're just looking like we're going to go a bit sideways before we continue the decline. So I would expect this week is just going to be choppy and sideways in nat gas. Maybe towards the end of the week we start declining again. I don't see us breaking to a new low this week, though. Moving on to gasoline, very choppy, still working its way a little higher, but we don't have the momentum needed to really call this a new bullish trend beginning. As a matter of fact, we had lower low plus higher high, and that's pretty much sideways. Looking at the daily time frame, you can see we are pulling back towards a demand zone right now on the daily, both a retracement of 61.8 and demand but we need to go sideways before we hit the demand. And if we do that, we may stay above 40. If we go below 40 on the RSI as we come into demand, we got a higher probability of breaking down. So it's kind of weird where the dollar, again, is going down. You'd expect these commodities to go up. However, they're decoupling a little bit as far as the relationship, and the dollar is still drifting a little bit lower, but mostly sideways. And that's what's allowing these commodities to still go down a bit more too. So in the 4-hour time frame, you can see we ended up moving down, a little bit of a bounce, but it looks as though we're still going to continue to push down at least to 2.5 for this week before we can get any kind of bullish pressure going. And finally, heating oil still in our downward trend. As a matter of fact, we couldn't even make it to the upper part of the trend before our downward channel before we hit our bottom again. So it looks as though we're going to continue to be weak. We had our impulse right here, correction impulse to our first target. It looks like after this correction, now we're on our move down to the 2.3, the next target. And the 4 hour is going to give us a shorting opportunity where if we get a rally to 2.5, really it's 2.53. This would be a great shorting area, and the target would be the next daily demand, or not demand, but projection at 2.29. So what I look for here is if we do rally at 2.53 to 55, that's your shorting opportunity, maybe with a little confirmation, wait for it to roll over, and then target the 2.2928 demand, or it's a projection. So that's what I got for you for this week. Again, if you got any questions, hit me up, brandonwendell.cmt@gmail.com. Follow me on Twitter, please, @TraderBDub. And of course, help me out, please, if you could hit the like and subscribe for the video. Give us a little bit of a bump there, and maybe even share with other people to let them know. Until next time, trade safe, trade well. Take care, everyone.